Are you interested in investing in short-term rentals but are just not quite sure how to make that deal analysis work? If so, today's episode is for you. We have Sarah joining us from AirDNA, and we're going to talk all about how to get those important numbers to make sure that you are profitable with your rentals. Sarah, thanks for joining me today. How are you?
Yeah, thanks so much for having me, Becky. I'm really excited. Doing great. The sun is shining. It's supposed to rain the rest of the week. I'm based in Barcelona, which we were talking about a little bit before we started recording, and no complaints so far.
Good. So share a little more about that. I automatically, when you mentioned living in Spain, as I used to many years ago now, we hopped automatically back into what kind of that lifestyle was back and everything. But why don't you just share a little bit about your background, kind of where you came from?
Yeah, sure. So I'm originally from South Carolina, born and raised. I did my university there, and then I decided to study abroad. I studied both in France and in Spain, and yeah, just fell in love with Spain and the culture and the people and the language, and just kind of forgot to go back home. So I've been over here for 15 years. um,
That's crazy.
I ended up doing my master's here, and yeah, now I've been in Barcelona and like the Barcelona area for probably the last 12 or 13 years. Yeah.
Now, how did you get into working with AirDNA? How did that come about?
Yeah, it was really random. I was doing something completely unrelated before I got into the industry. Actually, I was in pharmaceutical sales. And so I was doing that for a generics company and doing that at an international scale. So it was mostly like working on tenders and things like that. And there became a point where I was like, oof, this is way more technical than what I originally signed up for. Because I was in the States, it was fine. And then they transferred me and it was like, great, you can do this cool international role. But it turned out I was basically just registering our drugs overseas because you have to register them before you can sell them. So I was like, this is not what I signed up for. I need to pivot. I need to do something different. And I remember looking just out of curiosity to see what was out there. And I found the role at AirDNA. And it was one of the rare times where you read a role and I don't know, I think most roles you read and you think, I've got 70% of that. I can fudge the other 30%. But this was like the first time in my life where I was like, no, this was written for me. It was like somebody took my CV and like put it in ChatGPT, which didn't exist back then, and said like, write a job description for this person. So yeah, it was great. When I started at AirDNA, there were 4 of us in a co-working here in Barcelona. So it was like really early stages, very startup vibes. And now, yeah, it's grown incredibly. I think we're well over 200 people now across multiple offices. So it's been an exciting journey. And yeah, I can't believe it. Coming up this October, I will have been with AirDNA for 10 years, which is crazy. Yeah.
Well, it goes to show just really also how much that industry has changed. Before I hop into that, and also we have to talk about what AirDNA is here. Since I just learned this about you, I used to work actually in pharmaceuticals with myself. So I did pharmaceuticals for about 15 years. So that's really, and I remember looking at those jobs that would take me back to Europe where I used to live too. So very funny that that's what you went with. I'm assuming over 10 years though, your job has changed.
Yeah, absolutely it has. Yeah, I mean, when I first started, like, as I said, total startup vibes. I mean, like, I was answering support emails, I was answering phone calls, like, it was everything.
You were doing everything. When there's 4 people, you do everything.
Exactly.
So let's start with this. What is AirDNA? Because you and I have now said that 2-3 times here, and we've not addressed that. What is AirDNA for our listeners?
Yeah, so AirDNA is sort of widely known as the most robust source of short-term rental data and analytics. So we collect information for every single Airbnb and Vrbo property, soon to be another OTA, which I'll mention later in the call when we talk about new product developments. But yeah, we've been tracking those since 2014 on a daily basis. So from that, we get all the property characteristics, we get all of the reservation details, and then we aggregate that together in a way that is meaningful for anyone who is looking to investigate to see if it's worth getting into the short-term rental sector, start their first short-term rental or make their first investment, all the way up to large property managers that have portfolios of several thousand properties that are doing something much more robust. So yeah, there's something for anybody who's interested in short-term rentals. You should know about AirDNA or at least give us a look.
I'm assuming, and correct me if I'm wrong here, that AirDNA started after Airbnb. Would I be accurate in that?
Right. Yeah. Okay. Airbnb, I think the first listings were listed. God, I hope somebody holds me to this. I want to say like 2008, 2009 was when it sort of took off. And originally it really was sort of like renting a room in your place. It was very much like a couch surfing kind of vibe.
Which used to be the original Airbnb.
It was the original Airbnb.
And to me, was actually couch surfing, which was a site, not just a concept. But
no,
Sarah, I know you know that, but like...
It was a thing.
When I lived in Europe, that was what a lot of people I met. I stayed a lot and did a lot of work with hostels because I used to own a tour company there. But it was a lot of people that were like, oh, I couldn't find anything on couch surfing. .com. So I
Yeah.
had to book a hostel. So to me, Airbnb just really took that kind of idea and grew it, but it really was kind of starting within rooms.
Yeah.
For your founder, was now the growth of Airbnb what then kind of started AirDNA saying, hey, people are now making businesses out of this. It's not just renting, the extra bedroom for a few extra bucks.
Yeah, it was actually happenstance. So, so Scott, one of our founders, he actually had had enough of his like corporate job, was stressed out and wanted something different. And so he took a hiatus and decided he wanted to travel around Southeast Asia. And one of his neighbors was like, dude, you're going to be gone for months. You live in Santa Monica. Like you should put your property on this site called Airbnb. Like I bet you can make some money and like at least you'll cover, your rent. And he realized he was covering not only his rent, but making more money than he could spend in Southeast Asia and thought like, oh, this is a business. So he ended up coming back and was doing an arbitrage model for a while. And I think he got up to like, I don't know, between 10 or maybe even 14 listings. And then Santa Monica completely changed the rules. They quickly adapted to the fact that like, this is not something they wanted to be a part of. And so it kind of got shut down. But the original idea for AirDNA was like him looking around and thinking, gosh, like, how do I set rates? How do I know what I should be charging? How do I know if my occupancy is normal? How do I know if my ratings are good? And so it was kind of out of a necessity for his own business. And his dad was a data scientist. And he just said, hey, Dad, you want to help me scrape this site called Airbnb? And his dad was like, okay. So yeah, they just started collecting data and he was using it really just for his properties at first. And then he started thinking, you know what, like if I was looking for this and it doesn't exist, like I bet there's tons of other people. So he got a couple of other founders involved and they started it in a garage in Santa Monica. It's a very fun startup story.
That's how a lot of startups work. It's always in the garage. It's odd that all of these businesses that we're talking about with renting extra rooms and having all this extra space, and yet all these businesses started always in garages.
Yeah, it's true. Yeah, it's very true. Santa Monica is expensive.
Right. But it is interesting how some of the best businesses start out of your own needs and then realizing, well, if I have this problem and now found this solution, other people might also be interested in that. So with that, when you describe what AirDNA does, you use a lot of big fancy words, right?
Yeah.
I think kind of breaking it down, I feel like that is like one of the number one things that we discuss in Lady Landlords is great. What are our comps? What can I rent this for? And we have a lot of people over the years that have possibly been in the long-term rental stage that they wanted to move to short-term rentals. And we kind of always hear these buzzwords about how much more they can make. And they're like, well, if I can rent it for, $1,000 for the month, but hey, I can get $100 a night. Well, that times, 30 days, woohoo, I can make, 3 times as much money. And it doesn't actually work like that, right? Unless you can guarantee 100% occupancy.
Yeah, it really depends on the area, and of course it depends on the seasonality. And now with all the restrictions and regulations and things like that, like can you even rent that property? And if you can, like maybe you can get, I wouldn't say 100% occupancy because what we've learned through the data is like if you're getting 100% occupancy, you're leaving money on the table. Most likely, it means your rates aren't high enough.
Right.
Because so the best is some sort of mix. But yeah, you're absolutely right. Like there's also expenses. So I mean, on the whole, of course, it varies from area to area, but like an easy round figures, anywhere between 40 to 60% of the gross income is going to be spent on expenses. So whether that's cleaning, automatic lock software, if you want to sort of remotely manage, there's going to be maintenance, there's going to be, messaging that you're going to have to do or have a person who's doing that. So it definitely comes with a lot more expenses than a traditional sort of long-term rental property. And that's another thing that people don't think about. They just think about the gross rent and think, yeah, great, I can make 3 times as much, which sometimes, yes. And there definitely are markets where short-term still comes out on top, even once you get down to the net operating income of that property. But there's a lot of areas where, especially to purchase a property, sometimes like it just doesn't make sense. The house is going for 900 grand and you're going to make 50 grand gross by the time you take out expenses. That is a terrible cap rate. Please don't buy that property and put it on Airbnb. It's just not a good idea.
Well, how I originally came across AirDNA a couple of years ago was with one of our members in our Lady Landlords Inner Circle. Dead set on wanted to do Airbnb down in an area in Florida, a little bit north of where, like the Miami area. And she went, and I will never forget this. She went, set up this thing. I went to go check out the property with her, and she was setting it up, and she had spent so much money on furnishings.
Yeah.
Because it's not a long-term rental where you're like, great, I just need some closet rods and, an electronic lock. But now I need to actually think tea towels. I need to think soap. I need to think all these extra things to really make this place really livable. But the one factor that I feel like she didn't consider was what she'd be able to rent it for. So when we talked
Mm.
about, okay, I just remember her having so many boxes from Amazon being delivered, and she was putting all of that upfront cost to it. And I was like, great, but what can you rent this for? She was like, I don't know, I'm kind of hoping for this. And I was like, we have to find out what that number actually is.
Yeah.
That's actually how I originally, and this, once again, this was, 4, 5, 6 years ago by now. That's how actually I came across AirDNA and then started being able to utilize that for then my short-term rentals as well. But
Mm.
my world's still mostly in long-term rental, but I find it really like the go-to place to find
Mm.
your numbers for anything that's related to short-term. So who do you see as the types of people that are coming to AirDNA?
Yeah. So I would say it runs the gambit. The cool thing about AirDNA is that we tend to catch people at the very early stage of their journey. So we catch people when they're just looking into their first investment or considering buying or doing a rent to rent model or rental arbitrage is what we call that, where you would rent out long term, sign a lease, and then rent it. I don't know. I assume your listeners might know, but just in case.
Not also, I'm always happy. I was going to actually ask you to define that, but yes, rental arbitrage, when you hold the lease for a long term with somebody else, so you don't actually own the property, and then really you sublease it out as a short-term rental. But no, thank you. It always helps for any of our listeners that might not know a term to be able to break them down.
Yeah, sure. And I think that's one of the cool things about this industry is that there is that option to do this sort of arbitrage model where you can get in with very little upfront. And so, of course, you have to invest in the furnishings and things like that. But yeah, I mean, who is AirDNA for? It's for everybody from that budding, curious, not quite yet investor even, to somebody making their first investment into a short-term rental property, somebody scaling and growing that portfolio, maybe to a couple of additional listings of their own. And then a lot of times just by osmosis, most of the property managers that I work with, they started out by having one or two of their own properties and somebody else in the neighborhood saw and said, hey, can you manage mine? And it just sort of snowballed from there. And now they have, 200 listings before they know it. So it turns into sort of a full-blown business for them. Obviously, the needs are different at each stage in terms of level of granularity and level of detail of the information that they would need from AirDNA, but we've got it all. So
what are the top, say, three factors that people really come to AirDNA to find?
Yeah. So, I mean, of course, overall market information. So the ability to come and say, okay, what is the average 2-bedroom property with a pool in this neighborhood or in this market bringing in? And what does the seasonality look like? So having that kind of wide market information. The other thing, which is sort of the main reason people come to AirDNA or usually find AirDNA first, is our rentalizer. So this is our rental projection report. It's really cool. You can input an address of any property, even if it's not a short-term rental, it doesn't matter. And then we're going to automatically pull in what we consider to be the most comparable properties in the immediate area. And based on the performance of those properties, give you a projection of what you can expect for occupancy, average nightly rate, and revenue for a property at that address with those characteristics. You can also customize those comps. So much like a traditional sort of appraisal report, if you will, you can really run that analysis and feel confident in the numbers, and you can click through and see what specific properties are earning. So those are kind of the two that people initially come to us for. And then once the business is up and running, then it's much more about competitive benchmarking. So how am I doing against this specific set of comparable properties, both historically as well as like looking at forward reservation information. So seeing, okay, if I know on this specific block of dates, if all of my competitive properties are no longer available, whether because they've already been booked or because they're blocked out, then I know that I have a little bit more pricing power on those days because there's nothing else on the market. So I can maybe hold my rates versus if there's a date coming up in 2 weeks and nobody else is booked yet and everybody's still available, well, might be time to looking at some some discounts.
Okay, I'm going to come back to that in a second here, because that brings up a really interesting point. So I'm going to ask this in how it actually works versus how you think it should work, right?
Mhm.
Being the expert kind of in the space. Do you feel that people should utilize your site before buying a property, or
100%.
thank you. I was going to say
Why,
that's what I was
on
trying to
earth
get the
would you spend 100 grand, 500 grand, 850, $1 million on a property if you don't even know what it's going to bring in? I've seen that use case like so many times. It's ridiculous. The one I gave you earlier where somebody's like, oh yeah, but this property's worth $1 million. So it's going to be a really great Airbnb. And we look at the numbers and it's like comp support, 50 grand, maybe 60 if it's really nice. So
right. Or
no.
I've had people that, same thing, I had another member a while ago over the Inner Circle, and they were like, hey, want to know what we're going to do? We have the best idea ever. We're going to buy a place, get ready for this, by Disney. And I was like, great idea. But other people might have also thought about that. Like, we need to get actual numbers. We need numbers to go along with that. Disney, yes, A lot of people travel there, I'm quite sure. That I know. But what is the Airbnb going to perform as in that area is a very different question. So your recommendation is come to AirDNA first. Start looking at those numbers before you even purchase that property.
Yeah, and I think it's also important to have clear what your objectives are. I speak with some clients who say, you know what, like I want a property that's going to be mine that I'm going to use. And so I want it to be in one of these 10 locations that I would actually want to visit. And then on top of it, when I'm not using it, then I'll rent it out. That's a very different scenario because you don't need the same cap rate because you're going to be enjoying the property yourself and you have a certain list of criteria. But if all you care about is having this property as a pure investment, you should only be looking at the numbers. There should be no, oh, but I heard this was it. No, we're not going by that. This is how people lose money. So look into the numbers first. If there's not comps to support your analysis, you're not going to get what you think you're going to get. Just people.
Same with the people in the back, Sarah. No, totally agree. I see that a lot. We'll see that in Lady Landlords in our community where people will be like, oh, I just bought this property, and they're so excited. And they're like, hey, what do you think I can rent it for? And I'm like, no, we need to be doing deal analysis on the front end. Do you feel that most people, and I don't know if you have the data on this or just what your gut would tell you, do you feel that most people come to AirDNA before, or do you feel like they are coming after they already bought a property?
A lot of people are coming after. I can just tell you based on like the number of users that we have versus the 4 million odd individual hosts that exist in the world, we are not at the TAM. We have not scratched the surface yet of the total available market. I'm here to tell you. So most people are coming to us afterwards for sure. And by a percentage of people who decide to invest in a short-term rental or for some reason list their property on Airbnb or another OTA, the number is shocking depending on the location, especially.
Right. And we do have to consider some people, once again, are still renting rooms or they already own a property that they bought maybe as their own primary or have now moved and are changing things. So absolutely that consideration of I have this property, I inherited this property, I didn't buy it. Now I got to figure out what to do with it. Fine. We'll give those people a little bit of some credit there. And we'll reserve that for knowing that some people's situation is different. But I personally am on a mission to lower the rate of people that buy property without doing a deal analysis and understanding their numbers first. My own personal mission, Sarah, it sounds like you're on that team as well. But it's interesting that you're still seeing people that are in that position as well. What do you wish people knew about AirDNA that they just don't?
I think it's about how easy it is.
Yeah.
Like, especially the rentalizer, all you have to do is type in an address. And it's the easiest thing ever. I need address and I need bed and bath count. And from there, like you'll have a huge list of comps that you control through and you can decide if this one yes or this one no. But it's so easy. That initial like back of the napkin math, like I like to say, like you need to have an understanding of like what kind of cap rate are you expecting for this property or what makes sense, especially for a short-term rental. Like you need to have a much higher cap rate in mind because the level of work, if you think long-term rentals are not passive, people always talk about passive income. I think you know, and I do too. I own a property.
This is not mailbox money. Nope.
This is not a passive strategy, people. Short-term rentals, even less passive. So given that, like you need a higher cap rate in order to make up for the difference there. So I think you need to have in mind like what you're looking for and then let yourself be guided by the numbers. But it's so easy. That first step is so easy. The back of the napkin math to understand, does this even make sense for me to view this property? Or if I do view this property, what's the purchase price I need to be sure that I can get it for in order for the numbers to make sense?
Well, I feel like that tends to be like a holdup of people that maybe don't feel that technology or math like is their necessary strong point, right? Sometimes I understand that can be absolutely intimidating for people where they're saying, hey, this kind of makes me a little bit uncomfortable.
Yeah.
So when I want to make it very clear, though, with your site, it really is plug and play. They are not in a position of having to like break out, a calculator here, which all of us, by the way, have in our hands at all times. But we are not in a position where we need to have like a technical background. This is really a beginner novice can use this site to really get numbers that are just mandatory for this business.
100%. If you can look up a property on Zillow, you can use AirDNA. Like it's that simple. It's really not hard. And it takes 2 seconds as well. Like that's the other thing that I think people think like, oh no, I'm gonna have to really spend like, yeah, if you once you want to get the more in-depth analysis and before you make an actual decision to purchase the property, like yes, but the quick back of the napkin math of does this make sense, yes or no, for me to even schedule a visit for the property, that takes 5 seconds.
Let me address that. You threw in the word Zillow there. There are other sites that we will not name in this episode here that pull up similar comps, pull up similar kind of like numbers to those things. What makes AirDNA different than the others out there?
Yeah, I mean, the biggest thing is the accuracy. So we are one of the first on the market. We've been collecting information since 2014. We also have an extremely extensive data partnerships program. So we partner with PMS and channel management partners. Through that program, we receive daily reservation data for just over 1.5 million properties. To put that in perspective, globally, there's like 8 million. So it's a really large sample size of those properties.
25%, yeah.
Yeah, it's a really decent percent. And that essentially allows us to make sure that we're keeping up with changes in booking behavior over time. So, and also be hyper local about the approach. So we do have algorithms that help us determine, okay, what is the likelihood that this date, when it went from available to unavailable, was due to an actual paid reservation versus the owner blocking it out for their own usage or for maintenance or something. And this is really what sets AirDNA apart, is our ability to determine between those two, because otherwise we would be attributing every single day that the property was not available as a reservation, and that's just not accurate. So that's really what sets us apart, is our ability to determine that and the accuracy of the figures that we put out.
I think that's really important for how you're talking about certain people. Like for myself, I live in the Dominican Republic for part of the year, and I live in my short-term rental. That property for me, it was not to be my best cash flowing property. It was a place that was great if it could have me live there for free. That sounded nice, but it didn't need, that's not what I live off of in the same way as my properties that I own in New York that are longer term rentals. If I then went and said, okay, hey, for those 4 months, 5 months that I'm down there a year and have those blocked off and that looked like it was occupied, that will absolutely skew numbers rather than, hey, it's just the owner that's going to be there. And that also makes a difference during the time of year too. I'm there during high season. Right. Mm-hmm. So when people think about like kind of renting that out, I'm taking and renting it out during the worst month. It's important, right? Most people are looking to go to the Dominican Republic and the Caribbean in February and a March, not so much in July and August. So that's also going to make quite a bit of a difference comparatively. And I'm glad that you say that really needs to be taken into consideration with those numbers. To me, also, it's important that we're talking about the short-term rental industry and not just what we can find on Zillow or some of the other sites that are out there that are telling us what it's going to rent for within that month for a long-term rental. They're just, honestly, it's not something that really can be compared. What is one feature on AirDNA that, because we talk about market analysis, we talk about rent analysis, is there something in there that AirDNA can do that you're like, I wish more investors knew that there was this amazing option and this amazing tool that we have that just is underutilized?
Yeah. I think a lot of it is about awareness. And I think a lot of it is also people just don't even think sometimes about, okay, do I need to do this analysis? They just have in their head, oh, this property is worth X on the purchase market. So on the rental market, it must be worth Y, which I'm sure you see as well in like long-term rentals. Mm-hmm. People assume that it should be this because, well, the mortgage payment is that. Okay, but there's some areas where the mortgage payment is way lower than rent and other areas where it's way higher. So I think it's just a lack of awareness. And also sometimes it's wishful thinking. People almost, I think, sometimes don't want to know what the property is actually worth or what it can actually achieve. I think they want to continue thinking that it can.
We are stuck in a little bit of a day of social media, right? And I do feel, I don't know if you've seen this, actually, that's a good question for you. The short-term rental market has absolutely changed over since, once again, the company had started, 10 years ago. And even Airbnb itself, as you mentioned, with Santa Monica, not an area that really allows short-term rentals anymore. I don't know their rules over there, but I also do know where I am in New York City, you can't do short-term rentals there unless you, as the owner, are actually home in those properties, and they have to be for a certain period of time. There are a lot more regulations. Business is consistently changing. I feel that over the past couple of years, especially, I'm going to go back to pandemic time here, right? So we're talking like 6 years ago. I feel like people were not traveling. Clearly, people were staying at home. People eventually wanted to get out of their houses. I feel like and mortgage rates were really low. People did have, in some ways, not everybody, but some people did have extra income coming in with a lot of government programs that put money back in people's pocket to continue to keep the economy going here. A lot of people went and they bought short-term rentals. And I feel like there's kind of an explosion of short-term rentals for staycations back in like 2020. And then I also feel like we had a little bit of an explosion of social media, maybe a couple of years before that, where it was, once again, long-term rentals is mailbox money, which is a ridiculous concept in the way that my day goes. But then also with short-term rentals being not only the mailbox money, but hey, you can actually make more mailbox money with a short-term rental model or even rental arbitrage, that you would be able to actually make more money that way than you would with a long-term rental in this completely passive, oh, I have to do nothing besides eat bonbons and collect my checks kind of environment. Yeah. I do feel like I can see what you're saying with a lot of people really kind of not thinking about kind of that deal analysis, because I feel like I've seen a lot with being like, hey, this is just an easy way to make money when it's really not. What is kind of your take on kind of what that short-term rental markets look like over the past few years?
Yeah. So, I mean, let's be fair to everybody who thought like it's an easy way to make money. For a really long time, it was an easy way to make money.
Yeah.
Especially post-COVID boom. I mean, people were making tons of money. Average daily rates were at all-time highs. They were higher than pre-pandemic. So now things are starting to normalize and people are panicking and going, oh, what happened? Well, you've made an investment decision based on a very rare occurrence of something that happened after a 2-year essentially global shutdown where now people are allowed to travel.
Right.
That's what happened. You made this decision at the height of the market rather than at what is the normalcy for the market. So that's one of the things. And to be fair to people, there's a lot of money that has been made and that is still to be made on Airbnbs. I think where the difference comes in is really when it comes to some of the things that you've touched on, which is regulation, changing landscape politically and otherwise, that can impact the business. And this is another one of the reasons why for a short-term rental, the cap rate has to be higher. What you expect from that property has to be higher, not just because it's less passive, I guess we can say. We want to try and give people the benefit out. It's way less passive than a traditional long-term rental. It's more expensive, so you have higher expenses in general, but you also have this, I guess you can call it insecurity. I think that's a Spanishism, but like you have this concept that somebody can come in and then from one day to the next, and the county can change the regulations or the county can change zoning, and your business is dead or has severe, handicaps in terms of how it can make money. So just as you mentioned, like people were operating in New York City for ages, and then all of a sudden, well, no, not anymore. So now you have these additional restrictions, which essentially shut down a lot of business. I mean, Barcelona, where I'm based, like there's a mandate now to have all short-term rentals ended by 2028. So they're basically just slowly not renewing licenses. So a license here, not renewing them. So for the people who got in early and who have those licenses, they're making bank because the restrictions have made it impossible for new short-term rentals to come on, and there's fewer every single year when the licenses are not renewed. So if you were smart enough or lucky enough to take that risk 5 years ago, 6 years ago, 10 years ago, then you're doing great. But it's a risk, I mean, I know plenty of people who got into short-term rentals and bought an apartment and spent a bunch of money renovating it. And then like a year later, the rules changed or they stopped giving licenses. It's a gamble. So
I think it's interesting with that. Like, I feel like Airbnb, once again, we use it as that verb or that noun, right? Like I'm going to Airbnb this apartment. And I feel like that just shows almost how much power we kind of give another business to also control our business, right? And how those things are related. And I think we need to just kind of be wary of that, because you're right. I've seen there were people even once again at these fantastic times when there was such a huge opportunity in short-term rentals that still, if you go in and you say, great, I'm going to buy this place. Oh, it's really expensive, therefore I could charge more rent. Yeah. Unfortunately, that's not how that works. Your mortgage payment and your taxes is not necessarily equate to what you can receive in rent, long-term or short-term.
Yeah, it's absolutely true. Yeah, I mean, I know Barcelona is one of those economies that's like upside down. Like the mortgage on a property to purchase would be twice, sometimes 3 times what the rent is because there's rental caps. So it doesn't even make sense for long term, much less like even short term is a tricky one. So it's very market dependent, but something that people should be mindful of, which is why have at least being armed with data to understand what the trends have been looking like over the past several years is extremely important to see, is this a market that's becoming saturated? Is this a market that's showing decline, or is it on the rise? And am I getting in at a good time or is it risky?
Right. And that's, once again, that is why AirDNA is such an important site to be able to have. And to, once again, instead of guessing these things and making decisions based off of I hope, is really to go out and get some data. You had mentioned earlier in this episode that there are some new developments, some new things that AirDNA is working on. Willing to share some of those things here?
Yeah, I am. I got approval today to share them, so
Oh,
that's great. I
good.
was messaging earlier, like, can I say this now? Yeah, but no, it's public knowledge. So three really exciting things that we have coming up. So one I hinted at earlier, which is we're adding a new OTA, which is booking.com. So for a lot of our US
Wow.
viewers, maybe it's not quite as interesting, but in Europe and in the rest of the world, booking is a powerhouse and it's extremely important. So being able to have visibility into that platform as well. We're still going to be deduplicating the listings, which means if a listing or a property is listed on Airbnb and on Vrbo and on Booking, we're only going to report on that property once. So we're merging all the calendars, merging all the property characteristics, which has been a big undertaking. But I was joking with the product team when they told me, you can talk about Booking.com. And I was like, you guys have been saying we're getting this since like 2017. And it's fine, but now it's official. I saw the release docs. So we just
Okay,
got
good.
I was like, show me the release docs and maybe I'll mention it. Otherwise, I'm not going to get burned. It's been an undertaking, and the team has done a really great job with making sure that it meets our standards of data quality, which is why it took us so long to release it. The other thing that is going to be amazing is we have two new releases that are all about AI. So everybody's talking about buzzwords of AI. For me, the first one is the AI enhancements to our rentalizer. So as easy as it is currently, we're going to make it even easier where you can actually ask the rentalizer question. So you can say, hey, I noticed that this comp I thought should be a comp, but you didn't include it. Why didn't you include it? And it's going to respond to you. I didn't include it because of this, this, and this. And based on the photos, I think this isn't a comp and this probably likely is. Look, have you seen the color of the walls? Have you seen this compared with the rest of the properties? Maybe the kitchen needs an update. So it's going to give you all kinds of answers. You can even ask it questions of like, okay, what if I did a reno in the kitchen that was worth 10 grand or worth 20 grand or worth 50 grand? What would that do in terms of the revenue potential of the property? And it'll automatically update the comp. So the ability to be able to chat with the rentalizer as like your own personal advisor is going to be huge. And it's going to take a lot more of that guesswork, because we do have people that say, okay, great, for the initial analysis, this is great. But I sometimes struggle to find the right comps or feel confident in those. And so this is going to help people confidently select those. And then the other AI release that we are coming out with later this year is going to be dynamic rates. So what makes this different from everything else that's out there is all of the other dynamic pricing softwares were built first, and now they're adding in AI. Ours is AI native, which means it was built in AI and with AI. So again, you're going to be able to ask it questions. You're going to be able to say, hey, I have this owner and they think that the property should be worth X a minimum. Can you show me the comps in the area that you've chosen so I can take this back to them and have that conversation? Or where would you suggest that I put it if this is the occupancy that I'm targeting for this property, or this is the total revenue I'm targeting? And so it'll adjust the strategy based on what's happening in the market, but also based on what you're indicating to it. So yeah, that's in beta testing now. I think they're finalizing some of the pilot groups for the beta testing. And it's going to be huge, because one of the other things is when you invest in a short-term rental, the initial analysis is just that. It's initial analysis. What you can actually achieve with the property depends on how much you can maximize the revenue. Revenue management and setting the right prices to get that right mix of occupancy and nightly rate for maximum revenue is really the key to a well-managed business.
I like that we're consistently adding in more data, adding in a conversation where that data comes from. One of the questions I had that you had already answered about really working with some of those other platforms to pull in that data is, great, thanks for the data, but where does it come from? So I love the idea of really being able to go back to the system, right, and be able to say, well, hey, why wasn't this one used? I think that's actually great also from a learning tool for some newer investors, just to kind of understand, instead of just being like, hey, I was told it's X, but to really be confident in, I know it's X because I have an understanding of what's going on. So I really feel that those are great tools to add in. And I love any company that's sitting there being like, we have to kind of keep updated with the times and kind of continue to move forward and recognize markets changing. Therefore, we need to as well. So that's going to be very cool. Okay. So those are all things we should expect to see later this year?
Correct. Yeah. Yeah. I think most of them are coming out either end of Q2, early Q3. So,
okay.
Yeah.
Perfect. That's fantastic. Thank you. I really appreciate you giving us just a nice, good overview snapshot of AirDNA. Is there anything that I missed that you wish that I had asked about that we have not at this time discussed about the site?
Yeah, I don't think so. I think the biggest takeaway for the listeners is just data is accessible. It is easy. It's not as hard as you think it is to use. I think there's so many people who shy away from it because they think it's going to be too complicated. But if you're going to invest in a property and you're going to spend $500,000, wouldn't you rather spend 15 minutes, 20 minutes, a couple hours investigating that property first and making sure that it actually makes sense? So that's just my thing I want to leave the audience with, I guess, is
yeah, ladies, if we are investing all of our life savings into properties, right? Or any money, right? I don't care if you do have a trust fund. It's still, if you were spending that money in a place, make sure that you are putting in the right space. Get the numbers. It's absolutely worthwhile to invest in understanding your numbers and making sure you feel confident with that when you move forward with purchasing rentals. So Sarah, no, I appreciate you coming on and really nailing that piece home. So thank you. I'll make sure to put a link down to the website down in the show notes. So if anybody would like to go look around, get used to the site, I always just like to play around with certain sites and just to get like a little bit of comfortability with it. So I encourage our listeners to head over to the website. Once again, the link will be down in the show notes. So then that way you can really start to get a feel for it and understand data is not scary. And as investors, data is something that is absolutely needed. So Sarah, thank you very much. I really appreciate your time and just sharing a little bit more about all the great work you guys are doing at AirDNA. Thank you very much.
Yeah, thanks so much for having me, Becky. Appreciate it.
Of course. For all of our listeners, please do make sure to hit that subscribe button so you do not miss the next episode of the Lady Landlords podcast. We release new episodes every single Tuesday. Thanks so much and see you all back in the Lady Landlords community. Bye for now.
Thank you for listening to the Lady Landlords podcast. If you're feeling stuck in your real estate investing journey, visit lady-landlord.com to book a 15-minute orientation call with me and see if you're ready to join our mentorship program. Or you can subscribe to our newsletter and join our Facebook group for exclusive real estate investing tips and offers. Invest with confidence. Become a Lady Landlord today.